Ready to go live. Okay, we live now.
Okay.
All right. Hello, everybody. Welcome to the Legacy Life Prep Podcast. Sorry for the delay, but we're here now. So, for those who don't know, I am Carlotta. You know, they call me a life insurance advocate, and that's a podcast surrounding life insurance, but also surrounding just the Black community. Credit repairs, whatever the things that we need to talk about in the Black community, the podcast will be used for that. If you have your own business and you're a Black person and you would like to come on my show, it will be used for that. So it won't just be about life insurance. However, today we will be talking about life insurance. And I have here with me Deontay from Life, y'all. He gonna introduce himself, and I also have I don't know what you want.
Lakia Randall.
Your nickname.
Lakia Randall, the neighborhood insurance lady.
And we had the neighborhood insurance lady. She's with us virtually today because today
And,
we're talking about the difference between term and whole life. Realize that
the neighborhood insurance baby may also be making a special appearance because
yeah,
he's with me right now.
baby, it's the insurance baby. So I see that a lot of people still contact me and don't really know a big difference between when I talk to them. They say, "Well, what's the difference?" And I had to break it down for them. So I figured I'd do an episode surrounding them both. Even though I did one with myself, I have two other great agents here with me that can also tell us more about it, the pros and the cons. Um, the insurance lady, she's going to be talking about term, and Beyonce's going to be talking about whole life. So it's going to be like a debate. She's going to vouch for term. He's going to vouch for whole life. And then, of course, they can, cross examine each other. And she can say the things that's not so that people think is not so great about whole life. And then he can say some things about term that some people might not consider. But overall, before we get started, it really depends on the family. There's really no right or wrong answer, but we just decided, I decided to do it this way so people can have a little fun with it. But there's no right or wrong answer. If a family say they want time for whatever reason, that's good for them. And if another family say no, I prefer whole life, then that's what's best for them. All right, so who wants?
And Carlotta, your phone is breaking up, so I don't know if you can see your comments, but maybe you can ask the people if it sounds like it's breaking up on their end.
Oh, whoever's on here, can y'all? And can you write a comment? Go on yours to see if you can see the comments. Because the other day it was doing it. It's something with this. I'm using StreamYard. My apologies. I'm still new to Stream to see. I do see a comment. I can hear you. Okay, say a YouTuber. Okay, so on YouTube they can hear me. Go to my Facebook and share to your page and see if anybody can hear me on Facebook. I'm gonna start shortly. I just want to make sure on both platforms people can hear me and can comment. Okay, did anybody comment on Facebook? I share that to you so that the people can comment on there. Yeah, so on YouTube they can hear us well. They can hear us well on YouTube. So we basically just need to see if they can hear us on Facebook. And if somebody comment, because it say somebody is on there, but they not commenting. Yes. Well, I can. Well, it sounds like we can hear it pretty well. I just want to make sure that we can see the comments on Facebook. If not, he'll have his phone out for anybody that wants to comment. And I think we knocked the kid out. So let me invite her back on. She's in the back. Here we go. There we go. So someone on YouTube said that they can hear us really well. I'm not sure about Facebook. Oh, it went out again. Let me see. Oh, let me push him right here. Let me invite her back on. Uh-oh. I just put it up here. I gotta invite her back on there because it's not.
No, 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 no. I can't hear you. Can you hear me?
Now,
Yeah, I can hear you now.
all right, good. All right, so just a little run back of everything. So this podcast today is the 11th episode of Legacy Life podcast, and we'll be talking about, excuse me, y'all, because I'm a little hoarse, term versus whole life. We're going to make it fun. Kids going to be the advocate for term. Deontay is going to be the advocate for whole life. They can go back and forth if they like, but the pros and cons of both. Now, I was asking who wanted to start. Ladies first, ladies. So, what are some great things and aspects that you had to say about term?
Hopefully you can hear me because you're breaking up on your in your end. But I guess did you ask me what were the pros of term?
On the live, they said they can hear
Okay, so it may be just my phone.
Yeah, I can hear you really well.
Were you asking me the pros of term?
Yes.
Okay, so I would say the pros of having term life insurance is that you're able to a significant amount of coverage for less money. And it's typically, during the years that you would have. So term, and normally some companies offer terms as low as 5 years, 10 years, 15, 20. Some companies do 25, and it typically stops at 30, but there are few companies that offer 35-year terms. And it's built that way so that you can get a lot of coverage for less money during the years that you typically have a mortgage or children in school, college, during the years of your life that you have the most bills. So it's more like considered like an income protector type situation. So that's one of the benefits. And another benefit of term is pretty cut and dry. Whole life can get a little complicated because there's a few different types, but with term, it's typically it's a life insurance coverage that you have for a certain period of time. And also, I think that a benefit is that you're able to get it when you're young, or when you're younger, and the cost is so inexpensive for a lot of coverage. But most term policies now allow you to convert it over to whole life.
That is true. Yep, that must be her service. It went out again. Well, hers went out. We're still on. Oh, you can't. Yeah. Okay. All right, y'all. So her connection keeps going up. So we might have to invite her back in. But while we're waiting for her, nope, she ain't back on yet. We're gonna let him talk about whole life. And this is my first time having somebody virtual, y'all. So bear with us. Normally everybody's in person. So this is my first time having somebody virtual, and hers keep going out. So we're gonna try again. And there we go. All right, I think it's your phone. So can you hear us now?
Huh?
Can you hear us?
Yeah, I don't know.
Uh-oh. It just went out again. I think it's your phone. Say something again. Yeah, I think it's her phone.
Oh, can you hear? I think my mic was muted that time. Can you hear me?
All right.
Okay.
I think it's your connection.
Did you hear me before the phone cut out?
The last thing we heard you talk about how to go up to 35-year term, and you was about to make another point, but we couldn't. It went out.
Yeah, I was saying that most most companies allow you to convert your term product now. At one time, term was just at the end.
Yep, there we go again. Well, I know next time we're gonna be using StreamYard for virtual, but it could be her earlier because she's in Pennsylvania in the county for us, so it could be, but she's in. So you wait for her to come back. Oh, she's back on there already.
This is ridiculous. I don't know what's going on. I turned my Wi-Fi off. Let's cross our fingers that fixes the problem. I don't know what's going on, but like I was saying, at one time, term, huh?
Is your phone connected to your Wi-Fi?
I turned it off this time, so hopefully that works.
Yeah,
it was on Wi-Fi before.
Okay.
So, like at one time, at the end of your term period, the coverage was over, and most companies now are offering the option to convert the coverage to whole life coverage at the end of the initial term. Another benefit is that a lot of companies are now starting to offer where at the end of the term, if you outlive the term, you can get the money that you paid into it back. So those are some of the things that I would say are the benefits of term life insurance.
Now, when you say you can get some of the money back, what type of term is that called? For the people that don't know.
You said
what's the term?
You said what kind of product is that called?
Yeah, what's the terminology for that type of term policy?
That's called a term policy with a return of premium option.
Okay. So what she just explained was the ROP, or return of premium, which, like she said, is you can have the policy for 30 years, and if you outlive the policy, which we all hoping that we do, or you outlive the policy, you can convert that policy to a whole life policy. The value will decrease on that though, or you can get all your money back for the term policy. So it's a kind of a win-win situation. I say sometimes, depending on what the person is trying to get out of the policy. Now, because how connection is breaking up again, we're gonna go ahead and let him talk about the whole life. What's good about whole life before I add her on there. Here we go. Okay, so you're back, but we're gonna let him talk about the whole life aspect, and then we'll get back to you as well.
What's going on, guys? So when you talk about whole life, am I coming in clear? Can you hear me?
Can you hear us, Kim?
I can hear you. You're breaking up, but I can hear you.
Okay,
cool. So when you're talking about whole,
and it says I'm still backstage.
Oh, okay.
Kid did bring up a lot of good reasons for term, but when you're talking whole life, in the general aspect of whole life, you're literally getting it for your whole life. So that means that a lot of people tend to think that whole life is a policy for old people, older grandmas, or once you hit 55 and the 60, the senior citizen age, oh, I'm not gonna worry about it then. But to be honest, the best time to get whole life, to get the better value of the whole life, is to get it when you're young. A lot of companies will cover, a person with their older age, but when it comes to a time where when they're being covered and they're at a higher risk, a lot of companies tend to not want to take that risk with these people or with anyone. And you might say, okay, Deontay, so what are the risks? So a lot of risks are, if you get a company that say, listen, I had cancer 2 years ago, but I don't have it now, but I've had it. They're not going to take that risk on. or
Right.
I had cancer 3 years ago. The deadline or the cutoff is 2 years. So I've had cancer more than 2 years ago. But hey, guess what? I'm still on the chemo pill. That's still a form of treatment. I'm not going to take the risk on you. Of course, older age, height and weight is a factor. Medications you can take. You know, elderly people, we all know our grandmas got that Monday through Sunday medicine thing. You know, they're not going to take that risk on you. So when you're getting with a lot of companies where, you know, if they decide to take the risk, then there's going to be a policy called a guaranteed issue. Guaranteed issue is going to say, listen, I know you got a lot going on with you. I know you have, you know, diabetes. I know you take 4 medicines for diabetes a day. I know you got high blood pressure. I know you got this. I know you got that going on with you. But we're going to take that risk. But because we're going to take that risk, we're only going to give you X, Y, and Z amount of money. Most companies are only going to give you about $10,000 for a guaranteed issue policy. So when you're getting that $10,000, guess what? Is $10,000? Can we really say $10,000 is a lot of money to bury you, to get a plot, to leave for your family, to take care of some bills when you're gone, to, you know, to do all of the things or replace your income, because you're going to need that. And then when you get into the situation of probating, when you have a security, when you have a life insurance company that will, because their life insurance, of course, they're getting paid off your interest. A lot of people say, well, how are these insurance companies getting paid? It's just like a bank. You're putting money in the bank, so they're getting paid off your interest.
Right.
So when they're getting paid off your interest, they're not going to want to give you this money right away. They're going to want to wait 1 month, 2 months, 3 months, 4 months, 5 months. Then you get into the situation where families are arguing because the first thing you'll say is, well, I thought grandma had a life insurance policy. Right. Oh, well, she did. But grandma life insurance policy isn't an immediate payout. They want that death certificate. But they also want to know the cause of death.
Oh, so she said bring her on the live from Facebook, Kia, or from the StreamYard?
Probably from Facebook. She might be on Facebook. If you're streaming from Facebook, from YouTube, you won't be able to do that.
I'm streaming StreamYard. It's on both.
Oh, okay.
This is a new platform I'm using because you can stream multiple places at one time. So y'all bear with me. I normally have everybody in person, so I'm just trying to see how she want to do it. Let us know if you're talking about from Facebook or not, because then I can probably log in from my other phone and see if you can get on from there. But yeah, this is streaming on Facebook and YouTube at the same time.
Okay.
So that way, if you got people on YouTube, they can watch. It's a good little platform to use, but you gotta learn it a little bit. She said Facebook. Okay, let me see if I can bring you on from Facebook. Hold on, 1 second. See if I can bring her on. Be live. Okay, I think it's because we're live on the StreamYard that I can't bring you on there. Let me see. Put this back on there because I don't know how to get on there. Okay, so Kia, I'm gonna try to get you back on backstage because it won't let me do it because I'm streaming on 2 different platforms. So that's not letting me do it. Now how do I get back to? There we go. All right, so we're back. So Kia, try to get back on using the link because I think it's because I'm streaming at 2 different platforms that it won't let me do it. So just let me know. I'll look up and see when you get back on because a little red dot will come up and tell me when you're back in it. But go ahead and finish because you're making some good points.
So, you know, and then with the, where was I starting at? Where was I?
You was talking about the benefits of getting it young, benefits of having it while you're old, getting up at least $10,000
Oh yeah.
to use it for.
So now you have this whole life policy that is a guaranteed issue because you got it when you were older. Now this policy is $10,000, and a lot of the times because life insurance companies, they are life insurance companies, they're going to want the cause of death. A lot of people say, well, you know, people that are streaming say, well, my company doesn't need the cause of death, and that's completely true with some life insurance companies. You just got to pick and choose. You got to ask questions, because if you have a life insurance company that wants the cause of death, then they're going to look at that death certificate. They're going to reach out to that coroner. And guess what? It's going to take more than 7 days, because guess what? We try to bury. I don't think it's a law, but we try to bury within 7 days because we don't want that body to decompose. Now you got the family asking for GoFundMes. Now you got the family asking for French fries. Now you got the family asking for, you know, the rich auntie in the family to go ahead and she can put it on her credit card.
You can do it.
You know, and then when it's time to get it back, because she had the life insurance policy, but we're just waiting on this. Guess what? Because that life insurance company has held that policy, now it's going into probate. When it goes into probate, everything that's attached to that deceased name, to that social security number, is going to take off of that life insurance policy. Guys, you got to understand that when it goes into taxes, when this money is more than $10,000 or $10,000 at that cap, you know, it's going to go into an IRA. It's going to go into a taxable state. Now, car note needs to be paid. Oh, that last phone bill needs to be paid. Oh, well, grandma has some lights in her house, right? That has to be paid. That car insurance, that has to be paid. Those credit cards, those all have to be paid. Now, I'm going to step in and say that's a lot of the reasons why a lot of people do get term, but that whole life policy, because when you're getting it at an older age, that's why a lot of people they thrive away from it. You know, they push away from it. Not realizing that policy is literally something there that is set there for you to make sure that those specifics are taken care of. Now, when you're talking whole life and you're talking, the extensive of the whole life, you may say some companies, someone may say, oh, well, I was 72 or 73 at that grand peak of retirement age, and that company cut me off. Well, a lot of companies will do that whole life, but it's because of the type of whole life policy that you have. Now, there isn't just whole life. There are different types of whole life policies that will do these things for you. So that's why you do have to ask questions, which is why we're here today. So when you're getting the whole life policy, you get it when you're young. Get it when you're young. You can get whatever you need to take care of that college fund. That whatever you need is going to take care of those, separately. You get whatever you need is going to take care of these things, so that way you don't have to worry about that probate. And then a lot of times with the whole life policy, when you pass away, a lot of people think that it's just a natural cause death. But when a whole life policy is in effect and you have an accidental death benefit or accidental death rider with it, that elderly person can pass away in an accident. A lot of people say, I don't need that. What is the chances of, my grandma passing away or getting into a car accident and dying? She don't need to be on the road. Well, she might ride with somebody. They may get into a car accident. Grandma may pass away. And now because she has that term policy isn't for accidental, doesn't have that accidental death benefit rider, because she don't need it. She's 73 or she 82. She don't need it. She's not gonna be here for no much longer. Go ahead and get yourself a 20-year term policy, because she probably be dead by then. But then if she passed away in that accident, you're not going to have that policy that's going to be there. Then the company may not even pay you out, because guess what? It's just a term. Natural cause death, and she passed away in an accident. So whole life policies, they carry that natural cause, and they also carry the accidental. But the greatest thing about when a whole life policy carries that accidental is the beautiful thing that something is called double indemnity. The double indemnity says this.
Yes, making a point in the comments. Go ahead.
If the double indemnity says this: if you pass away with whole life policy and you have an accidental death rider, and it doesn't have to be grandma, granddad, whomever you respect or whoever you know that's an elderly. They can pass away in a car accident and it's ruled as an accidental death. That double indemnity kicks in. That means that not only are you getting that accidental death, but you're also getting that whole life as well. So with a term policy, you're not getting that benefit. Now, one thing that I do say, if I ever offer a term policy for anybody, it definitely is the return of premium, because it's just more beneficial.
Yeah.
It's more beneficial. And a lot of the times you have to think about it with a whole life policy. When you get that term and that term cuts off, and you have an exceeded or you have an illness that came up while you had that. Once that term cuts off and you try to requalify, you may not even qualify for that term policy again. So if you keep continuing to getting term policies every 10 years, it's going to go up because you may not even qualify for it. And if a company takes that risk on you, it's going to go up. Whereas though that whole life policy, you don't have to worry about that premium increasing on you. You don't have to worry about if you're in perfect health and then a year later you develop cancer. Or you don't have to worry about, if that policy is going to cancel on you, because they're going to continue to keep you covered. And if you pass away because of an illness that you didn't have when you got the policy, you're still covered.
Okay. And Lakia said, because she was having technical difficulties, she said accidental death is for any cause of accidental death, not just involving vehicles.
Mm-hmm.
Those riders are also available with term policies. That is true. Mm-hmm. Many don't make you prove insurability. Yes. Yeah, that's true. So since Lakia we keep having technical difficulties, we want to listen to her in the comments. I do have a question for you, Lakia. What are some cons about whole life that you would like people to know, that you would consider a con for whole life policy? Because I could think of a couple, but it's like a give and take. So I would like to know from you, what would you say a con of whole life would be? And then I'm going to let him do his con. Even though he said some, I'm going to let him talk about his cons for term. And then after that, y'all can, talk back about why you advocate for each, and then I'm going to sum up the pros and cons for both, so that way people can have an insight of, hey, you know what, this might be best for my family. Less coverage for more. Okay, she said less coverage for more money. Okay, talk about that a little bit. Kid in the comments, when you type it, I'm gonna read it off to everybody. But so she's saying that with whole life you get less coverage, but it costs more money, which is true. You do get less coverage in term, as he stated. Term, you get more money. You get more coverage for your money, of course, because you only have it for 5, 10, 15, 20, 30, sometimes 35 years term, as Kid mentioned. So yes, of course, term is cheaper than whole life. Whole life is more expensive. And what else, Kid? Less coverage for the term. Yeah, that's what she said. She's probably typing some more stuff. What do you have to say about that, having less coverage for more money?
I would say I agree, but I disagree. Yeah, I say I agree, but I disagree. Now, I would say with whole life coverage, there are some companies that will give you a max. Mm-hmm. I'll just tell you, I have a company that I'm with, a company that because we just deal with final expense. Mm-hmm. We're going to give you that cap. A final expense cap. I want to say federally known is like $30,000. That's the cap. The cap for term is $50,000. The greatest thing about it is you can mix and match. It's not illegal to get just one policy for yourself.
Right, you can.
So you
y'all
can definitely
please
mix
note
and
that
match.
Because I've had people ask me that. Well, can I have more than one policy? Yes, you can.
Yeah.
When you're doing a life insurance application, they do ask you, do you have another policy, or are you trying to use this policy to give it that one? Whatever the circumstances may be, that does not mean that you cannot have two policies. It's people that have policy on themselves, and their grandma got a policy on them, and mama do too. So that's perfectly okay. Let's see what else she said. Cap for term, where is it 50K? Companies are doing away with whole life for younger ages. That's true too.
I was talking.
Not necessarily senior life because you, like you said, y'all focus on weed because I'm with senior life too. So was she. More so taking care. Yeah, whole life.
Or the elderly. Yeah.
The elderly. Mm-hmm. Yes, but a lot of companies are doing away with whole life for children. I don't know why, but they are weird. It's kind of weird to see that because I do think one thing about whole life that is good for the 18 and younger people, the ones before they hit adult age. Yeah. I think it's like a mismatch of how that should go.
Mm-hmm. And that cap for 50,000 is for final expense. So
final expense he was talking about.
Yeah, so that cap for 50,000 term is for final expense.
Okay, and for those out there, explain that what final expense means because they might think you're talking about a regular policy. Let them know what just the final expense. What you mean by that?
So final expense literally means just that. When you're born, you have a birth expense. You have all those medical bills that's attached to your birth. So final expense literally means just that. Your burial, anything dealing with the funeral, anything dealing with any expenses that has accrued when you passed away. That's that final expense.
Just taking care of your burial. That's it. Mm-hmm. That's to take care of the burial. Because you do have final expense for whole life, but you do also have whole life, whereas like you said, it's just your whole life, and you can get more than the 10,000 and 15. Right. So you can get more than that. You can get 100,000 in whole life and all of that. So just to be clear, those are two different types of whole life he's speaking about. He's speaking of regular whole life. And he's just speaking of final expense as well. Mm-hmm. She said, I actually think it's best to have both whole life and time. I just said, I agree. I think you should have both. Me personally, being an agent and learning more about life insurance over the years, I think you should have both. When I was younger, I heard older people talk about whole life, but I didn't really understand it. And then when I got into the life insurance business, I heard more people talk about term, I guess because that was just like the thing to do. And I used to work for a company that they only did term. So I always would hear term this, term that, term that. But after doing my own research and just going out on my own and doing my own thing, I think it just depends on the family. And I also believe that if you can get both, get a term with return of premium, if you qualify, would be the best one to get, and get a whole life policy.
Now that's key though. If you qualify.
I was going to say that.
Because term, you have to get a term at a certain age.
Yes.
You cannot get a term when you're like, when you're increased in age. I had a lady who, her and her husband actually has a whole life policy with me. With the company that I'm appointed with. And we, of course, this is going to be another topic, for another day, but we preach about how your jobs don't get coverage with your jobs, right? But she had a policy term. They always offer the term, I'm not going to say always, but they have a group and group policies. And that particular group policy, I believe it was a term for, that job. She called me and she told me she wanted a term for because her job was doing away with their policies, but because of her age, she wasn't able to qualify. And current health as well. So you gotta definitely just be mindful that when we say term, it is. I like to tell people when you get a term policy, that's for those. That's for the privilege. It's term policies. I know I'm an advocate for whole life, but term policies are definitely good. I'll tell you this: my sons have 2 return of premium policies, and they end at 20 for 20 years. When they turn 23 and 23 and 21, then those policies end. They can take that money. They can purchase a car. They can purchase a house. Because it's the returning the premium, all the premiums that I've paid up until for those 20 years. And and they also still have, a whole life policy on themselves as well, because they still need that as well, and when they turn 21 and 23 and I release these policies over to them, guess what? I'm going to still preach to them, get a return of premium policy, because now you can either do it for yourself at 40 to 43, or you can do it for your children just like I did for them. So I'm definitely not going to say, but it is a qualifiable.
You had to qualify.
Your health got to be good.
And Kia said, I asked you. Oh, she did. She already read that. Oh, she was saying they choose both. And also, when I meant by qualified outside of the age, I was talking about qualified as health wise, because for me, even though I have both policies, I cannot qualify for a return of premium because I have lupus. Okay. So I have an illness that's considered uncurable. I don't claim it, but as the doctor would say, it's uncurable. So for somebody like me, I wouldn't qualify for a return of premium because I would be considered a high risk. So definitely with return of premium, you have to have the standards that they want you to have to qualify for it. I will say, if you're healthy, if you're in the age bracket, if you're healthy, if you don't have any DUIs and felonies and stuff, and you qualify, please get the return of premium and the whole life at the same time. It's the best of both worlds. You can't go wrong. You got a policy that's going to pay you back if you outlive it. You got the whole life policy that's just going to be there for your whole life. You know, so it's like, it's kind of like a give and take. If had I known, I didn't know about return of premium when I first found out I had lupus. Let me say that. Because I would have got it before then. But I didn't know about return of premium until after I found out I had lupus. So that's another good thing about qualification for term. Term is a little bit more stricter when it comes to health and everything and the things you do in your everyday living. Because they giving away a lot of money at one time. You know, you die tomorrow, you pay for policy today and die tomorrow, and they won't cut it out to you just as long as there's no fireplace. So there is a little bit more stricter with that. And also, I wanted to say some good things and bad things about both. For me, it's like I said, it's a catch-22. I would say a downfall with whole life is the fact that you do have a cash value to it, but if you die, you can't have both. I think that's just a ripoff. Now, we don't do this personally because we can't go above the law. This is the law. So when you pass away, your family has to choose if they want the policy that they have versus the cash value, and the policy is going to outweigh the cash value. So you don't get to keep both. That's one of the downfalls I never liked about having a whole life, because I'm like, if I put my money into something, my family should be, hey, we want both of these, not pick and choose. That's one of the biggest downfalls I would say about whole life. And outside of the fact that it costs more than term. Now with term, the downfall with term is you gotta qualify for everything. So it's like somebody like me wouldn't be able to get it'd be hard for me to get a regular term policy. I would even be rated or it would be just a no. The other thing is, if you do not qualify for return of premium, then you just have the term. Say for instance, I didn't qualify for return of premium, right? And I just have a term policy and I outlive it. That's it. That's it. That's all you wrote, you know? So it's like, that's going to be it for me. Now, say for instance, in 30 years, say for instance, I didn't have lupus right now. I get a policy, I outlive it, but in 30 years, I get lupus. So I'm not going to qualify to get a new term, and also term increases, as he stated. That's one of the things some of the things with some of the terms that they do increase. What's another? I think those two are my main pet peeve with whole and term. If you just get a regular term and you outlive it, that's it. You got to start over, and you might not be in the best shape to start over. You know, our bodies get old, and with whole life, it's the whole. You can't have your money that you put into it that just irritates my life, because it's like, I want my family to have everything. So those are two I would say.
But with whole life though, there is an automatic loan provision for that. Now,
yeah, that's true.
The automatic loan provision does two things. You can, most companies, I know with our company, the automatic loan provision, if you miss a payment, that interest that's accrued on that payment, you can that's on that policy, you can take and automatically pay that policy up, so that way your policy doesn't cancel. Yes. The second thing about that with the whole life is that you can borrow from that interest up to the last dollar amount of the policy. For instance, if you're having $10, $20, or $30,000 policy, let's just say if you have a $20,000 policy, you can borrow up to $19,999 of that policy to do whatever you want with it. Now, of course, you do have to pay it back, but if you don't pay it back, then at the time of death, whatever money you've borrowed, whatever amount that you've borrowed, they will take that from the policy and give your beneficiary the remainder. So if you have a $20,000 policy, you only took $10,000 of it out, you can take the $10,000 if you haven't paid it back, and you can take the remaining $10,000 will be cut to your beneficiary to utilize for your death benefit.
Yes. Let's see what Kid's saying. She said, with some types of policies or some companies you can. She was talking about you. We were talking about the whole life. Always get one that converts even if you don't get ROP. Yep. Mm-hmm. It only increases after the initial term period, not during the initial term. So that's no one is confused. Right. That's what she said when I was talking about increasing term. Only during the initial time period. Now he did mention, because before we didn't mention it about borrowing. I think borrowing from your policy is depending on the person. It's a catch-22. I think it could be a good thing and a bad thing. It could be a good thing because if you start a business, if you come into a hardship, we just had COVID, people lost, their jobs and stuff. And if you had a whole life policy for a certain amount of years, because it is stipulations to that, you can't just get a whole policy today and tomorrow say I'm going to borrow this money. Right. No, you got to put money into that policy. So I think in some circumstances, especially with people we just had this whole COVID thing and people losing their jobs, those were whole lives. I'm pretty sure they went and borrowed some of that money and said, you know what? Times are hard. Let me borrow this. Now, the downside of borrowing is you got to pay it back with interest. And what if you die before you pay it back and now your family only getting a certain amount? So it's like, it's a catch-22 with term and whole life. That would be the only downside I would see about it. But as a business person in a business state of mind, whole life is really good for that because you can't borrow from your term policy. You can't, So if you're somebody that's trying to get your stuff off the ground, you want to do it, put your money into a whole life policy for a few years and use that and double it up and then pay it back because you have a vision, you got a goal, you know what you're trying to do. I would say whole life would definitely be a good aspect for that. Return the premium. Let me see. She still was saying it only increases. Return the premium again. Those two would be the best for me. I would say getting a basic term is good too. You get, like he said. She's still backstage. Let me put her on. She wants something to say. When you're
can you hear me?
Yes, we can hear you.
Okay, so I just wanted to piggyback off something you said about when you die with whole life, the family can't get the cash value and the death benefit. But with some companies and some type of policies, you can get both. It's not one or the other all the way across the board. In some companies you can. Also, I wanted to piggyback about the borrowing against your policy. I wanted people to know that it's not like you get the policy and then a week later you can borrow against it, because it doesn't start even accumulating the cash value until the third year. So a lot of times people, they try to make loans against their life insurance policies, but it doesn't even start to accumulate the cash value into the third year. So that's something that people need to be aware of as well.
Yes, that's what I was telling them, because right before you got on, you probably didn't hear. That's what I was saying. Don't think you're going to get this whole life policy today, right, and then you're going to try to go borrow from it tomorrow. It don't work like that. You got to put into the policy, they had to see that, you're putting into it, that you paying on time, everything like that. So it's like, no, you're not going to just get this policy and then next week and say, oh, yeah, I need to borrow $5,000 from this policy. Nope. It don't work like that. And I'm glad that we iterating that, because I actually had someone called me like last month, and they was like, so if I get a whole life policy, can I borrow from it next month? And I had to tell him, like, that's not how it works. She was an elder woman. She didn't understand. So I had to, sit down with her and break it down to her what I meant by that, because another, maybe she, I would say another agent told her that because she heard it. But from when she talked to another agent, she thought that it was right away, because she said, I'm not going to say that the agent said this, but there are some agents that don't know any better. We all still learning, just like doctors are still learning. We don't know everything. That she said that the agent told her that she can do it after 30 days. And I was like, no, you can't. So I'm not sure if that was, if she misread or if that agent truly thought that, because they could have been a new agent. But no, guys, you cannot do that. You cannot do
Probably
that.
get about $1 accrued on $1.
And I thought of another benefit of term, because you were saying something about a business. A term policy is good for people like business owners.
Yes.
Because if you're trying to protect the business, if something was to happen to your co-owner, a term policy would allow you to insure the other person. Like you get insurance on each other, and you can get it for a significant amount of money at a cheaper cost.
Yes, that is true. The key person policy.
Whole life, that as well. You're able to get a whole life policy on your business partner. Well, if you're a business partner, you have that insurable interest on that partner, because
right, yeah,
you take on a financial loss or financial, so you're able to do that as well on whole life,
See, but more expensive.
But
it's just not going to be as it's just going to be more expensive.
It comes with a price, and I mean, not to scare anybody on the pricings. I honestly just think that it's better to get it when you're young.
Yeah.
I agree with that part as far as the 18 and under people, the babies. And
and because there are a lot of companies, there are some companies out here, and there are also some agents that will tell you that your children don't need insurance, or if someone doesn't have anyone depending on their income, they don't need insurance. But I don't agree with that, because everyone has to be buried, and we don't know, or not everyone doesn't get buried, but everyone is going to die, and they're going to have something has to happen with their remains. Whether it's burial, cremation, something has to happen with their remains, and someone's going to have to pay for it. So not only is that a reason to get the insurance on your children, or get the insurance even if there's no one dependent on your income, but also people start to think about insurance like when they're getting older, or when they start being diagnosed with things, or when they have a health scare or accident. But that's kind of the worst time to get it. It's like getting auto insurance after getting in a bad accident. After you get in an accident and you go shopping around for auto insurance, the prices are going to be higher if they insure you at all. So life insurance works the same way. Like, you don't want to wait until you get diagnosed with something, or you're a lot older, or because it makes the coverage harder to get at that age, at that point.
And
that's when you get a lot of people starting to say, "Oh, life insurance is too high, it's too high."
Yeah, because you're 85 years old with every illness under the sun, and it's like
now we can only give you.
You only can get a certain amount, because they think you're right croak. Let's just be honest. As you get older, your risks go up because you're getting older. Even with men. Men pay more than women, because men die before we do. Overall, not saying all men, but the statistics show that men, we outlive men. So men, we could be the same age, and he's going to pay more than me in the same state, because with the same amount of coverage, because that's just how it works. So anybody out here, especially anybody that's pregnant right now, get that baby insured as soon as possible.
And another reason is, I think Deontay spoke, on it. You want to get the coverage young, because not only is it inexpensive, but you know, if you're not diagnosed with anything, it makes it easier. It's the same way with children. So they're really going to be inexpensive to insure because they're so young. But like, let's just say newborns. I know there are newborns that are born with, you know, conditions, unfortunately, but most aren't. So if you get it on them, like when they're young, when they're newborn, but you know, chances are they're not diagnosed with something that would make them harder to insure, because I don't use the term uninsurable, because as we know, there's a policy out there for everyone now. The days of being uninsurable are over. But you know, when they're young and, you know, newborn, it's less likely that they'll be diagnosed with something that's going to make it harder for them to be insured. So that's the best time to get the coverage, because as they get older and they start getting diagnosed with things, they already have the coverage in place. And a lot of companies, if you have coverage on them at certain time frames, like maybe when they graduate, when they graduate college, or they have their first child, or they get married, or at certain ages, a lot of the companies will allow them to up their coverage without even asking them any health questions, because that's a benefit of already having the coverage in place. They let you get more at certain times without even having to prove insurability. So it not only allows you to get them coverage at a cheaper rate, it secures their future insurability. So if they get old, you had the coverage in place and they get older, and God forbid they're diagnosed with something that would make them harder to be insured, one of the benefits of you getting it for them when they're young is that they won't even have to answer those questions once they, you know, become sick or something like that, because the coverage is already in place.
Yes, because I've had people, as long as I've been doing insurance, and they say, well, why would I need insurance for my kids? Well, they need it more than you do. And it's a benefit for them, like you said, because most kids do not have illness, not going illnesses and stuff like that. Not saying that those that have, you know, some kids do, but for the most part, they aren't. When they get older and they got to transfer and get their own policy, they ain't got to answer them that question. And guess what? They can have cancer, they can have lupus, they can have all types of stuff. But guess what? They ain't got to answer none of them questions.
They already locked in.
They already locked in. Get them kids covered because they already locked in. So that's one of the greatest benefits, because for some reason, a lot of people don't understand the importance of having it on kids. They really don't. They'll say, well, I'll call you back and do it for my kids. And I'm like, whoa, wait a minute. Let's talk about the price with your kids now, because for one, because your kids need it, you know. Sadly, I've had clients that I had, or people that I've talked to, that their child has died without a policy. You know, so it's kind of like as an agent, it hurts for one. As a mother, it really hurts because I have kids, and I don't know what they feel like to lose a child and not have coverage for them. You know, to bury them when you're already fighting the fact that you lost your child. A parent shouldn't have to bury their child. It should be the other way around. But unfortunately, for some of us, we have to bury our kids. The mental mind state that I would believe a mother or father will be in, on top of trying to do something financially, I don't think I would cope with that very well, with not having them finances right there to help me cope with it. Right. You know, so I always tell people it's very important. No matter, I don't care if the baby a week old, because after 7 days you can get coverage on that baby. Yeah,
you don't need the Social Security number.
Yeah, you don't need a Social
Right. You don't need the Social Security number, right?
So don't think that you're jinxing your child because you're getting coverage. Because I've heard people say that, oh, I want to happen to my child. Well, you're right. That's why we're getting this coverage. Because
that baby shower, you have 12 people to pay a premium for your child. You don't need all those other gifts, man.
Exactly, that's a gift.
12 people can pay that premium, man.
For the year. That's a gift.
And speaking of the premium, there are whole life policies, because it's rare to find a term policy for children. Can you hear me? Oh, it must be about to go out again. Can you hear me? Hello? Oh man, what happened?
Oh, there we go. We back.
Okay, you hear me? Okay. So speaking of the premium, so it's rare. I don't know if I've run across a term policy for a child, but there are whole life policies for children that work like term. So there are some there are some whole life policies where you can pay for its whole life, but you can pay for it for like 10 years. And then the child has coverage for life and you don't have to make any more payments. Now it's going to be a little more expensive because you're paying for it in a shorter period of time, but you can get it, you can pay for it. And by the time, let's just say they're a newborn, by the time they're 10, you're done paying for the policy and they have the coverage for life. And they can still get more coverage at a later date if they choose to increase it or you choose to increase it.
And let me piggyback off of what you said, because of course, when you're paying something in a shorter period of time, like 10 years, like she said, it's going to be more money. But let's talk about the fact, if like she said, you're doing it from birth, it's really not that much money. It's really not that much money. Like, I could get her to quote right now how much a $20,000 policy would be for a newborn 10-year pay. And you'd be surprised how much it is. It's really not that much. When you think about it,
$10, $16.
when you think about it, we spend more money on clothes, shoes, eating out, and stuff like that. I wish, and I'm being honest as an agent, because when my kids were born, I put them riders under me. I didn't go get them a whole life off the bat because they had one now. But when they was babies, I wish I would have did a 10-year pay policy when they was babies, because my kids almost grown. Yeah. A couple 2 years we good. They grown. So had I had a whole life policy when they were babies, they'd have been paid up 10 years ago. 8 years ago. 7, 6.
I'm logging in to do a quote now.
Yeah. So she gonna do a quote for y'all because I need y'all to see this. Especially those that have newborn babies, 1-year-olds, or about to have a baby. I know my sister was on here, Keisha. She's about to have a baby, and I'm definitely going to try to get her to get that 10-year policy for this baby because it's definitely a good thing to have for whole life. But she about to do this quote for y'all because I just want y'all to see it's really, really not that expensive. I think when we sit down with people, they just don't know no better. They assume it's just going to be so costly because when I tell people prices, they be like, "Oh, that's it? That's all I'm have to pay?"
Yeah, life insurance to somebody, man.
They get so scared.
You're cursing at them, man. A lot of people really don't like to have that conversation because they think it's expensive.
And let's be real.
Yeah.
A lot of people, our people, black folks, we're the main ones. 90% of the time is us. Let's just be real. I'm gonna keep it real because this podcast in the beginning I was recording it. I started doing them live because I and people just to see the bloopers. Whatever happens, that's what you're gonna get. So I started doing them live for that purpose, so they can see that we're real. We're not just doing something out there. Our people, black people, we have the hardest time when it comes to life insurance. When it comes to anything with finances, we don't want to talk about. Death, we don't want to talk about. But death is inevitable. It's going to happen. Finances, we need to talk about more because that's how we got to deal with everyday life. So
we make GoFundMe so rich.
Yes, we did.
We make GoFundMe so rich because
we
that's what we do. We don't talk about life insurance. We rather wait, and then we, like I said earlier, you go to that rich auntie.
I can't hear you guys. If you can hear me, I can't hear you.
Oh, there we go. All right, we're back.
Okay, you can hear me now?
Yeah. So he was saying, go ahead, talk about the rich auntie.
Well, yeah, you go to that rich aunt or that rich uncle when you try to get those policies. That like I said, just doubling back. We are the the culture that is well known for that. You know what I mean? When we talk about generational wealth, we hear about the Rockefellers all the time, man, but we don't understand that they built their wealth off of life insurance policies.
Yes, they did.
They built their wealth off of these term policies, off of these whole life policies that they were able to borrow from and then start a business and then pay the money back, you know. But we don't talk about it because to be honest, you know, I got into the game because I didn't see a lot of me out there talking to the community, because they don't come to our community, you know, or they'll go to these elderly people that will pay off their Social Security check so they can give $300 a month and not think about it, you know, getting ripped off. So I've experienced it. You know, I've experienced where, you know, a friend of mine's passed away. His mom didn't have the insurance to, you know, the policy to pay for him, and she was paying off, you know, the funeral home for 2 years. You know what I mean? Like, we got to live better than that, man. So, you know, that, you know, term policy, whole life policy, it's literally the greatest avenue for generational wealth.
It is. It is. And let me
so,
and then I'm gonna let me just say,
I did the quote. Oh, sorry.
To piggyback up what he said, it's funny that he said that he don't see a lot of our people in the community and advocating for us, but every last one of us on here and him, we all are the same. They have the same mindset when it comes to that. You know, advocating for our people, because this is what we do for our people. This is why all three of us got into this. Besides the money, we really did get into this for our people, because we are the ones that lack the knowledge the most. But go ahead, kid. We ready for this quote.
So I did a quote. I did 20,000 because that's the amount that Carlotta said. So with this particular company, because some companies, when you're a child, they don't factor the sex into it. It's the same price for boys and girls. This particular company, they do ask about the sex, and it's slightly more expensive for boys than it is girls, but not much. So I did 20,000 because that's the amount she said. So if you're doing the 20-year pay for 20,000 on a newborn, it's $20.13 per month, which I'm going to give you the amount that it would be if you didn't do the if you did it to pay to 100, because you know with most whole life policies you pay until age 100, right? If you did it that way, it's $8.13 per month. So yes, the 10-year pay is slightly more expensive, but remember, you're paying for it in a condensed amount of time. So it's going to be more expensive because you're paying it off. When you look at paying for 100 years versus 10 years, yeah, you're going to pay a little bit more, but it's still significantly cheap, and the child will have coverage for the rest of their life. Also, let's just say you pay it off for the whole year. Then if you choose to pay it off yearly, like pay it yearly instead of monthly, you literally only make 10 payments and you're done with it.
Yep. True. And you pay, yep. Okay, so
and most for children's policies, children whole life, I think most of them, I think a lot of the companies, they let you get it in increments of like 1,000, like, so you can get as little as 1,000, and many stop at like 50,000. The company that I did that particular quote for, the max is 75,000 for a child. So like, you know, most companies allow you to get a lot more for adults, but I guess for the children, they max out at around 50 or 75 because they don't have anyone depending on their income. And it also is built in where they can get the additional coverage at certain milestones when they're older if they want to. So they don't really, you know, they typically stop around 50 and 75 for while they're still minors.
Okay, good. So what's the price for the 10-year pay of an infant? You're doing a male right now, right?
Yeah, that was a newborn. Yeah.
Okay, well,
for 20,000.
How much is it?
It was $20.13 for 20,000, and if they did the pay to 100, it was $8.13.
You are hearing that both prices though, $8 for pay up to 100 and $20 and some change to pay up for 10 years. $20 a month.
Yep. Yep. And that secures them. They're locked in. I think that was the term that Deontay used. They're locked in. And you may look at it like, well, 20,000 isn't a lot, but let's not forget that even if you start at 20,000, even if you start at 15,000, 10,000, they still have the option of purchasing additional coverage when they're older,
Right.
or you can purchase additional coverage for them when they're older, and they don't have to answer any of the health questions. So even if you can only afford to start with a small amount, you still have that benefit of being able to afford additional coverage at a later time, but it locks you in. And if life happens and they're diagnosed with certain things, they won't even have to worry
Right.
about, not being able to get more coverage. You all right? So life insurance is one of those things where, and it's one of the few things that I would say, something is better than nothing, because, we hear the term thrown around, underinsured, and yes, technically you can be underinsured, but with life insurance, especially for us, like Carlotta said, a community who typically, a lot of people pass away without it. I always say, and there's a lot of agents out there that may disagree with me, but I feel like some coverage is better than no coverage, because let's just say the average funeral is, I'm just going to say 10,000. I'm just throwing a number out there, right?
Mm-hmm.
Even if you're only able to afford $5,000 in coverage, which that would be typically underinsured by most people's standards. However, it's easier for your family to be able to raise 5,000 versus having to raise the entire 10,000. So in some cases, you get what you can until you can get more.
Anything is better than nothing. Let me put that out there. Anything is better than nothing. Because when you have nothing, your family can feed off of nothing. So anything is nothing.
I think the main purpose that everyone needs to understand is life insurance. Although it's good to leave money to your family, but that's the very first thing we think about. The very first thing they say is, "Well, I want to leave my family. That's my family," and then they negotiate their policy and have nothing left for their parents. So the main objective for life insurance is to not put when you pass away. Now, things have to get taken care of, and guys, a lot of cases you can go to a lot of companies, or a cell phone company or a light company, water company, and show them a death certificate, and they'll dismiss whatever payments that they need from you. So you don't have to always take a life insurance policy and leave X, Y, and Z to your family. The main objective is just to make sure that you have an immediate payout so you can get your funeral taken care of, so your family doesn't have to worry about that expense on top of all the other expenses that you left.
Exactly. Because, and it's great if we can leave.
Yes.
It's great if we can leave a lot of money to our family, but like Deontay and I always say, at the very least, yeah, we would love to be able to make sure our family is straight after we're gone. But at the very least, the main point, the main objective is at least not leaving your family in debt, because somebody is going to have to bury you. So if you at least have the coverage in place where your burial or your cremation or whatever is going to be done with your remains, if you leave enough that they can take care of that, then on top of, so let's just say, you're the one who's the breadwinner in a family, right? And because some people will be discouraged from purchasing life insurance because they can't really afford enough to be able to leave something, but let's just say you're the one who, you know, the family depends on your income to pay all the bills, right? So if the family depends on your income to pay all the bills, and they're going to have to figure out how they're going to pay the bills after you're gone, but you didn't get the life insurance because you don't have enough to, you know, leave them a lot of money. So not only are they going to have to figure out how to pay the bills, but now they're going to have to figure out how to bury you on top of how they're going to pay the bills. So let's not make your burial or your funeral one more debt that they have to incur.
Yep, that is true.
Which is why it is always to have multiple policies.
Yes.
That's specifically designed for your burial. And then if you want to leave more, there are other companies out here where you can go ahead and get multiple policies, and that way those policies are there, set in stone for whatever bills you got to take care of, and to still leave some for your family.
Right. And you know, step into, so Senior Life has a program called Legacy. I want you to, before we get off the line, about that. Some people are unaware of that, where they can add on to it. They don't know what it is. So I would like you to also give us so they can see, be aware. Again,
Senior Life has partnered with a company called and Legacy. Just to break that title down, it's you know, we all leave legacy,
right,
so
yeah.
we know what legacy is. So it's just assuring that you're going to be able to leave a legacy for your family, leaving something for your family. So if you guys aren't aware, if you guys aren't aware, Walmart sells caskets, right? And so, Walmart will sell a casket for maybe $1,500, $2,000. Well, you can go to a funeral home. That funeral home is going to sell that same casket for $6,000 or $7,000, $8,000. So, Legacy Assurance is a program designed to allow you to get discounted merchandise, as well as if you have someone that has a, if you're getting a policy with us and you have someone that doesn't believe in getting life insurance or doesn't believe while they're young, you can your Legacy Assurance program for people in your and if they pass away while you are, of course, if they pass away while you are still alive, you can utilize your Legacy Assurance program while they're on your Legacy Assurance benefit. You can negotiate their funeral costs. You can get them that discounted. You can get them that discounted headstone. A lot of the time, I go into people's homes, and the very first thing they tell me that they don't have for their mom that passed away or their grandma that passed away 10 years ago is a tombstone.
Yeah.
No. So, and also, we don't realize that after Hurricane Katrina, it's a federal law now that any casket that is put into the ground has to have a vault. Because we all know when Hurricane Katrina came, a lot of those caskets were coming up, and a lot of those caskets were floating around that state. So now it's a federal law that each casket put into the ground has to have that vault. So what do funeral homes do? Funeral homes say, all right, well, because we know it's a law, we're going to make you charge. We're going to charge your arm and leg for it. But right. Legacy Assurance is guaranteed that you're going to be locked in for that price. You're not going to pay anything more. Now, when I say you're not going to pay anything more, it's a base price. You can go onto the website. You may see a casket for the guaranteed locked in price, $1,000, and they handcraft their own caskets. So it's going to be a beautiful casket. But you might see the same casket on the same website. It may have a golden trim. It might cost $500 more, $200 more. So although we say, you pay for the quality. Right. So you can get a casket for the locked-in price of $2,000, and you're able to cover up to 4 people in your household for that.
Yeah.
Absolutely free of the charge. Now, they're not cover the monetary portion of it, so meaning pay for the funeral, But that discounted coverage, we can guarantee you're going to have a casket there. Not going to have to worry about the funeral home casket. You're going to have a vault there. You can get the tombstone for, I believe it's locked in now at $850, where I don't know if anybody's online now that's paid for a tombstone, but if you've paid more than $280, definitely talk to Carlotta on this, because it's something that you can grab.
I know people personally that paid a lot of money for that too. And I do believe when it comes to the legacy program, that is awesome that you can add people to it for no additional cost.
Yeah.
You have to still be alive, of course, for your family to get the benefits for it. They would have to pay as you had to be living, basically. So I just want to have to tap into that so y'all can know that as well. So sometimes when you, he said, sometimes you only got the money to pay for a burial, which is fine. But at least with some companies, especially like Senior Life had the Legacy, they connected with Legacy, they will guarantee that you can have a proper funeral, you know, without breaking your pockets, basically. So at least, you know, your family won't have to worry about that. At least your family won't have to worry about that.
And I wanted to piggyback off of something else that, because I'm liking that term, locked in. A lot of people don't know, because the cost of burials go up significantly, you know, throughout the years. And, you know, a lot of people don't realize is that you can go directly to a funeral home and you can pre-pay for a package, and it locks you in at the price that the coverage is at that time. You know, like if you go and you know, pre-pay for a funeral package and you don't pass away for another 20 years, they can't go and then tell your you know, your loved ones, when they're going to take care of your final expenses, you know, everything with your funeral, they can't say, oh, well, you owe me $20,000 more, because it locks you in at the cost that it was when you prepaid for. So a lot of people don't know that that's an option, you know, because sometimes, you know, we may get a life insurance policy, let's just say it's a final expense policy, and we only get a certain amount, and then the person lives another 20, 30 years, and then it comes time for the, you know, the insurance to pay out. And depending on how much they have, it may not be, you know, maybe they did want to leave something. There's nothing to be left over, or may not be enough because they only got a small policy. But you can go to the funeral home and pre-purchase a funeral package, and it will lock you in at that price that it is the date that you purchase it.
That is true. And I've actually been, I've been to a few funerals that were like that, where the person had it, got the done before they died. All of them was was young, our age. They all was older people, so they saved me a little something, because I've been about 3 or 4, and it was like, okay, they had everything done ahead of time, and like you said, they was locked in with their price, which is also as well, because, you know, inflation happened everywhere with everything, with food, with life insurance, with everything, everything going up. So that's another thing to consider as well.
So if you decide to go that route, you have a good agent, you have a good life insurance company. These companies, we're licensed to go to the bat for you. We're licensed to make sure we get the job done for your or for you. So if you do decide to go that route, just please, because my family has gone through this, and you don't learn until you. I think experience is the best teacher.
Yes.
So, you know, me knowing this now, I'm able to say this to people because my family experienced this. My grandmother, my grandfather purchased plots at 9 children. They purchased 11 plots for their 9 children and them too. It was many, of course, years ago, where you can purchase plots or burial, you know, areas for like $2 a piece, of course. So this church it was Calvert County.
Okay.
But this church, of course, throughout the years, people pass away, and the bookkeeper of the church passed away. And it has been through, I want to say, 3 or 4 generations of that bookkeeper, and all of the information was lost.
Wow.
My uncle and my great aunt passed away a few years ago, December 18th, I want to say. And when it was time to have their funeral, my uncle didn't have a burial. So my aunt around figure out where this person, where that person, who had this, who had that. It's just mind wreck. My mom, for anyone, So if you go that route and you do decide to go to that particular funeral home or any funeral home, that church or wherever, and you get that burial, I just advise you guys to keep track of your documents.
Yeah, I was gonna say
keep
documents.
Track of, if you have to go every 2 years and make sure the books of that church is kept on track, 5 years or whatever. Keep your documents, notarize whatever you got to notarize. Because life insurance, we have lawyers to do these things. So if something like that were to ever happen, we know what to do to prevent those things from happening for you. But if you go and you do it yourself, you don't have that advocate for you, or that person to back you up. It could be more mind stressful for you. So definitely make sure you have your
always
documents.
have your documents for everything.
And to piggyback, that's a very good point. I love that because I hadn't even thought of that. So yes, that's very important. Make sure you keep up with your documents and utilize the other suggestions that Deontay gave. And I would like to also say that even if you don't go the route where you pre-purchase your funeral, your funeral package with the funeral home, even if you have a traditional life insurance policy, make sure that someone knows where your documents are, right? Make sure your family can put their hands on your life insurance policies. And another thing that I tell all of my clients, because some companies allow email, like where they can deliver your policy. Instead of you getting a hard copy of your policy, they can deliver it electronically. I always tell my clients, unless you're going to print that policy out and have it where your family can put their hands on it, don't opt for electronic delivery, because if it's stuck in your computer, you never print it out, no one has access to your your online information, no one has the details of your policy, And I also tell my clients, make sure someone in your family, make sure your agent knows other members of your family, and other members of your family know who your agent is. I had one of my before I was in the life insurance business, my insurance agent, it was a lady, she worked with state and city employees. She said that she always went to the funerals of her clients because she did it for state and city employees. She would always know if someone passed away. One of the clients passed away because she's affiliated with the government agency that they work with. She would go to the funerals of her clients because a lot of times the people in the family wouldn't even know that they had a policy. So she would go so she could, connect with, someone in the family to let them know, you may not have known they had this policy, but they do. And, blah, blah, blah is the beneficiary, so they can, get the claims going. So I always tell my clients, make sure your agent knows some other members in your family, and make sure members of your family know your agent.
Yes, and another thing, piggyback off of what you just said, make sure your beneficiary know who they are, because that is the biggest.
Yes.
Of course, you want your family members to know, hey, I got a policy, but whoever you put down for your beneficiary, please let them know the beneficiary, because a lot of people pass away. They don't know, and these companies, they're not gonna call your family and say, the beneficiary, and say, oh, so and so died, come get this money. No. They're the beneficiary. They got to do the work. So please, I just had this happen. Somebody called me a couple of weeks ago about this, a few months ago, last year. Please tell your beneficiary that they are the beneficiary, because that is just so crucial when it comes to life insurance. because the company is not the company. Now you might have a nice agent like myself or him or her that they might have a little, good rapport with that client. They can reach out for you, but that's not all the time. That's not going to happen.
And
Everybody.
make sure you keep your beneficiaries updated, because there are a lot of people who the beneficiaries have passed away and they've never updated. They still have the deceased beneficiary listed as the beneficiary on their policy. They haven't called in to change it. They haven't called in to make someone else the beneficiary. So make sure your people have exes. People still have exes. Now, sometimes you leave your ex as your beneficiary intentionally because you want the money to go to them. You may have children, you may have shared assets, but there are some people who just forget and they have this ex that they would not want their money to go to, and they still have them on as the beneficiary. People don't update their address when they move. Make sure I tell my client, at the end of the year, we're all thinking about our New Year's resolutions and things that we want to do in the new year, get healthier or whatever. Do an insurance check-in. Make sure your beneficiaries are updated. Make sure your beneficiaries are updated. Make sure they have your current contact information, because a lot of that stuff can hold up the payment of your death benefit as well.
Exactly. Yes. Yeah. Because listen, you don't want no ex that will gladly want to cut your throat and not care about your kids having all the money you don't left them $500 and y'all two were just beefing. They done beat you up, man or woman or something like that. You just got to make sure you really tap into some things, because sometimes we don't think about that. We don't think about the. Yeah, I had a policy person. We're no longer together. Y'all number broke up 5 years ago, and you still got that man. She beneficiary and I got a whole nother husband, wife, whatever. So please that you're updating it.
And please have a contingent. That's the secondary beneficiary. Always, never do primaries. Always have a contingent, because if something happens to your beneficiary at the same time as you won't have the ability to change it. So you have to have a contingent. And if you don't have
in a plane accident,
Kobe Bryant, and if you don't have a contingent, then a lot of the time that policy and I'll tell you, for our company, a lot of the times we'll give you that option. If you don't have a contingent, we are the contingent. We are the second. And I'll tell people straight up, we are still so we're going to act as a life insurance company. So you're going to can hold that captive for 1 month, 2 months, 3 months. We can hold it legally up to 5 months before a family can take legal action and sue or try to sue for the policy. So you don't think that they're going to keep that policy possible to build interest up money, because you're not paying on the policy no more. They got to get their money some type of way. So they're going to keep that policy to pay on that interest so they can build that interest up. So always have a contingent. If you don't, like Lakia was saying, get the opportunity to switch your person, then you at least have a second backup.
Some people do die together. I mean, it's whatever. People die together. Unfortunately, it happens. These are the things we don't like to talk about, but we should talk about, honestly.
And if your intention for your life insurance policy is for a portion of the money or all of the money to go to your burial, don't make your minor children the sole beneficiaries. Because they don't pay out the death benefit to minors. So if you want your children to be your beneficiaries, like Deontay was saying, make sure you have a contingent, because the money will go into a trust until the children turn 18. So if your intention is not just for them to have money for when they get older, and you definitely want a portion or all of that money to go to your burial, and you only have your children listed and they're minors, that's not a good idea. I can't hear you. So if you guys are saying anything, I must have lost you again.
Okay, maybe. Oh, there you go.
Okay.
Yeah. So
Yeah, but even if it does, you know, when it does go to that minor child, a lot of companies are going to give you that option for the guardian of that minor child to take on that money too. So you, like she was saying, hey, you got an ex that you don't like, but if y'all share children,
he will not be getting up my coins.
that money will go to that ex. And do you think, you know, to take the money out too, and have it paid to the guardian of that child? So just keep that in mind too, man. You know, but it's always you just do your research. Do your research. When you're going into a car lot, I'm gonna use the car analogy like a kid. Going to a car lot, you don't pick the first car you see. You know, you don't get the test drive policy, but you look at the Carfax, you look at the history, you look at all the features, you look at everything they can do, and if this car is made for you, this is the one, then that you know, that's how you utilize the right company for you. So
well, I wanted to just say this real quick. You kind of can test drive a policy, because what a lot of people don't know is that policies have something called a free look period.
Yeah, free look period. Yeah.
Where it's a certain amount of time, and it kind of varies by state, but it's a certain amount of time. If you get the policy in the mail and you look it over and you feel like this policy isn't for me, or it wasn't what I thought it was, or I just realized that I had this $1 million policy, I don't need this policy anymore. There's a certain time frame where you can say, I no longer want this coverage, and you can get your money back. It's not a long time, just like the test drive. You know, you can't go and you take the car for a month test driving it, right? So it's a certain amount of time that you can look over the policy, and then you can change your mind and you can get that first premium back.
Yep.
So that's kind of like a test drive.
No, I forgot about that. Thank you for bringing that up. Look, that's the first thing they teach us when we go to when you go to do the class. You know, as an agent now, it's more understandable. But I'm like, what? Why was something? But you know what? As an agent, it's very important to see that, because just like a car, you could get a car 5 days later, it's doing all this stuff. You're like, nah, I think here you go. Because CarMax does that. I think it's 30 days or 15 days, something. CarMax does that. You can take the car, you can get them all the money that you have. And if you don't want that car, as long as you bring it back in a certain time frame, there's no penalties, there's no nothing. So it's the same thing with life insurance with some companies, and it varies by state by state. The free look period is a good thing to know as well. Because like you said, you might find out, oh, this somebody else got a policy on me. Wait, whatever reason somebody may want to change or cancel their policy. So that's a good thing to know as well. So as we wrap it up, I would like to say thank both of my agents for coming on. We had some technical difficulties, but we got all the good information, all the nuggets that we needed y'all to know.
Right.
I'm gonna see all these bloopers. I'm not taking them out. All the nuggets we want y'all to know. I'm hoping that you got it, that you can go pass it on to your kids, your other family members, your co-workers, your associates, your husband, your wives, because we all need this type of information. Also, thank you all for tuning in. For those who tuning in on Facebook and on YouTube, please share to other people if you can. And the most important thing is to know is just get you some life insurance. Whole term, there's no right or wrong answer. If you qualify for both, I recommend you get both, because you do have to qualify for some policies. If you qualify for both, I recommend that you get both. And please, please, please insure your children.
Yes.
Last words y'all want to say?
Yeah, do your research. Like I said, when I did say there were multiple whole life
You're
policies, do your research. There are a few out there that I don't recommend. I'll touch bases on one.
Yes.
A dual. I don't recommend a dual policy. Dual policy is the husband and the wife both have the same policy. I don't recommend that. I think that each person should have their own policy. I do not recommend a first to die policy, because husband and wife have the same policy, and whomever passes away first has the benefit of using that policy. The other person does not have a policy at all. I do not recommend universal policies. Just do your research, man. Do your research. And when I say do your research, that's not asking that agent, unless you, I would say ask the agent, but you also still got to do your, double check.
Ask the agent and do your own research as well.
Yeah, do your research. Just do your own separate research on whatever questions you've asked. And if you have to ask multiple people, do that. Always have somebody in the room with you when the person is if a person is coming into your home and doing a policy for you, always have a second person there, because someone will hear something that you won't, or understand something a certain way that you won't, or ask a question that you won't think about. So always do your research.
Kia.
And yeah, I just wanted to thank you for having me. And I don't have much more to add, but I did want to add a little to what Deontay just said. I've told clients, I've mentioned before on my social media platforms that some of the same books that we study from to become life insurance agents and get licensed, you can purchase on
Amazon.
Probably Amazon, if you want to get more, if you want to learn more about life insurance, the ins and outs, how it works, just so you can have a working knowledge for yourself and answer some of these questions. If you feel like, there are a lot of agents out here that will take the time and
education,
explain it all to you, right? You can also call the companies. You can call the companies and they'll break down different things for you. But if you want to have a working knowledge for yourself and you don't want to feel like anybody is giving you a biased opinion, you can go and purchase the same books that we study from off of Amazon, and you can study up on this stuff yourself.
Same thing if you go to the doctor's office. You can go get a book on whatever medication you taking, whatever herbs you taking. Research. It's the same thing with anything else in life. Sometimes we gotta do our own little research, because even as agents, we don't know everything. Me and her call each other up and say, "Well, what this mean?" Because you're still learning. And you can't put everything on one person. I've learned that. That's why I get mad. Lawyers, because we all are. We still learning. Yeah.
Speaking of medication, really quick, Carlotta, I want to make this point. I have a lot of clients will submit the application. It asks about certain medications and it asks about this and asks about that. And they'll say, no, I don't have this. I don't have that. I'm not on this. And then it'll go to underwriting, and the underwriters will see a medication, right? And the client will say, I got it filled, but I don't take it. Once you get that prescription filled, in the eyes of the life insurance underwriters, you take it, because anybody can say, oh, I filled this medication, but I don't take it. Once you fill it, it's in your prescription history and you're considered as taking it, So once you fill it, if they ask about it, you have to disclose it on the life insurance application.
It's even worse to have it, filled and not take it. That's what we ask. If you have a prescription or signs and you haven't done so, like those are questions that we ask. So you have the option. Look, a lot of prescriptions. Unless it's something severe, a lot of the prescriptions you can get over the counter. So, for instance, I a nerve in my and I went to the hospital because it was bothering me, and now it's bothering me. But I asked the doctor, I said, give me, if it's something that I can get over the counter, just give it to me over the counter. I choose not to have anything on my medical addendum. You have that option, so if it's something that you can get over the counter, if it's something that's severe, medical, just get it over the counter so you don't have to have it on your medical addendum. Once it pops up on there, we can't really do too much. We got to,
true.
by law, we got to listen to that medical advice.
Yes, and I was saying, thank you for saying that before we got off the line, because I've seen that so many times. And they say, well, I can take that. And I'm like, but it's on your record. Now, it can't just be expunged off. You know, it don't work like that.
Right.
It's on there. You know, they want to see that you taking it some for the time. So it's like, because you don't take it, they do, clients get upset. They be like, but you went and picked it up 2 months ago, which means you gotta wait a little bit for policy, you know. So just keep that in mind when we do ask, are you taking any medicine? That means have you went and picked up some medication from the pharmacy, and if you're taking it tonight, it doesn't matter. Go pick it up. That's what we need to know.
Don't forget to tell us.
Tell us so we can.
You can go to a company and tell them that you have a immune deficiency disease, and they say, oh, we can't cover you. You come to someone, us or another company, and you're like, well, I'm not gonna tell them because I want to get covered. We'll find out.
The company will see it.
All the companies see your information. Let me say that again. Because I've had clients say, well, can you try me with something? No.
We will see it.
They're going to see everything. Once you
and
we got everything.
Another thing, and this can go on forever, but I swear this is going to be the last point I make, because we can go on all night. But there are companies that will insure the condition that you have, right? So if you're saying you don't have something, or you're saying you're not on this medication, even if that condition or that medication would not have caused the denial, if they feel like you're lying on the application, that could be the one thing that causes the denial. Because you said yes to something that you should have said no to, or you said no to something that you should have said yes to. Some companies will deny you based on that fact alone, and other companies will sometimes deny you just because you were denied by a previous company.
That's what I'm saying. They all get the same information. They'll see, oh, they got denied by 3 other people. Nope, we don't know what's going on here. We're not gonna cover them as well. Yeah. So don't think lying, because I've heard people say I and then was even ready with
And don't place your agent in a position where you want them to lie for you, because then that jeopardizes our license, and we can't do that. So don't go telling us, yeah, I have XYZ, but I'm going to say no on the application, because it's our duty to make that known. Because if we know something and we intentionally put a lie on the application for you, that jeopardizes our license.
Yes, and we're not doing that.
I always, it's just like, buy because you're a doctor. You got to know. You can't tell us. So we're going to find out.
Find out, because if you told your doctor, well, we're not judging you because on this, or because whatever the case, when you obey, whatever. We're not judging it. We need to know how we can.
Yeah, because a lot of times the company off of that, you may rate it different. That company has that ability now to set your price or while we're on with you, or we have the ability to set your price before we your home. If we can't set it because once it gets to the company, they're going to set it. It's going to be way more than what we were going to do.
Right.
So just tell us the truth.
So I think we about summed up everything, because like all 3 of us ever.
Yeah.
So
we love, man.
Yeah, we do. That's why I come on here. So I thank y'all for coming on. I turned in, and again, share. You need, please, pay attention to what we said at the end. talk about. So just if you did something and you was on here for hours, so you might be one of the people that got ADHD and be like, oh, this is the last, take the last. If you are to legacy platform, you are. See you later, kid.
Bye. See you later. Thanks for having me.
You're welcome.